Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi. Welcome to another edition of our weekly podcast. Global equities gained for the fourth consecutive week. After struggling initially amid escalating geopolitical tensions in the Middle East, major US indices rose later in the week after non-farm payrolls data showed that the US economy added higher than expected jobs last month, while unemployment rate fell to 4.1%. This drove bond yields higher and the USD staging a strong recovery against major currencies like Euro and GBP. The S&P 500 index, Nasdaq Composite and Dow Jones Industrial Average ended the week with marginal weekly gains. Asian equities performance was mixed, with Chinese and Hong Kong equities continuing to rally strongly on the policy stimulus measures announced over the previous week, while India, Korea and Thailand equities fell around 3 to 4%. Back home, the Nifty index recorded its sharpest weekly decline so far in 2024, driven by SEBI's latest regulation covering derivatives activity, deteriorating domestic economic activity indicators, sharp rise in crude oil prices amid rising Middle East tensions, and sharp outflows from domestic equities. Broader markets outperformed Nifty index over the past week, with the Nifty mid-cap index down 3.2%, while the Nifty small-cap index was down 2.5%. Among sectors, except metals, all of the sectors ended the week in red, led by realty, auto and energy falling more than 5.5% over the past week. India's fixed income market had another volatile week. After declining earlier in the week, government bond yields rose across the curve amid rising US bond yields, escalating geopolitical tensions, rising crude oil prices. For the week, the 10-year Indian government bond yield rose 7 basis points to close at 6.83%, while the 3-year and 5-year government bond yields rose 2 basis points and 7 basis points, respectively. The INR fell 1% against the USD over the past week to close at 83.97 per dollar amid rising crude oil prices, strengthening US dollar, rising US bond yields, and sharp foreign investor outflows from domestic equities. INR gold rose 0.5%. Brent crude oil rose over 8% for the week to close at $78.4 per barrel, logging its biggest weekly gain in over a year on mounting threat of a region-wide war in the Middle East due to conflicts between Israel and Iran. However, gains were limited as US President Joe Biden discouraged Israel from targeting Iranian oil facilities. Coming to macro updates for the week, the first was on India's manufacturing PMI, which fell to 56.5 in September 2024, marking the softest pace of expansion in factory activity since January, as both output and new orders grew at a slower pace. Additionally, new export orders dropped to the lowest since March of 2023. On the pricing front, input prices rose in September, while factory gate price inflation eased. Overall, business confidence fell to its weakest since April of 2023. The second data was on India's services PMI, which eased to 57.7 in September of 2024 from 60.9 recorded in the previous month. This was the 38th consecutive month of growth in services activity, but at its slowest pace since January of 2023, as total new business, international sales, and output all rose at the slowest pace since late 2023. On the pricing front, input cost inflation accelerated, though staying below its long-run average. Meanwhile, output cost inflation eased to its lowest level in over 2.5 years amid strong competition. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.